You'll need only 2 or 3 candlesticks to make this happen. So let's begin with the video. In this video, you are going to learn how to make entries mostly. I'll show you step by step on how to do everything properly. So without wasting any of your time, let's start with the video. In this video is for people who are a beginner or someone with a trading strategy but with a weak entry strategy. I hope you get my point there. And also this video is for someone who wants to leave trading indicators and wants to start using pure price action. So this video is going to be useful for you. This is going to benefit you a lot if you stick till the end of the video. And also the topics that we're going to cover in this video is the candlestick structure basics, structures that we need to use always, market momentums and reactions, plus we are going to include 8 examples to understand on a chart. And also you will also get this free PDF today on this video. You'll find it in Telegram, and also we have a Discord server, so you can also join. Telegram is free. I post weekly trade setups, so if you're interested, you can also follow us there. So let's continue with the first thing with this video. Candlestick structure analysis. The first candlesticks that we need to understand is this two here. The bullish setup will look something like this. The bearish setup will look something like this. I made this PDF for you guys so that you can print this out, so that you can put it on your wall, so that you can see it every day. And also the structure for a bullish setup structure will look something like this. The market has to break this low here, and also it has to print out this candlestick pattern like this one. And also on a bearish setup, when you are looking to sell, that means you will be looking for the market to break this high here, and then the market should also give you this candlestick here, this candlestick pattern here. To understand this candlestick, let me demonstrate. For the bearish side, you will have this bearish candle around this area. You'll have this candle, and also you will have this candlestick that looks like a hammer. And also this is a rejection around this area. And also this rejection candle here, it has to trade below this bearish candle here. And also this candlestick has to close bullish. I hope you understand me. This candlestick have to make a line around here. This will be the low. This will be the low. This will be your bullish candlestick. This will be your bearish candlestick. And also this is just vice versa to this one. You have to find this candlestick pattern around this area here. Also on this side, you have to find this here. This bearish candlestick here has to trade above this. And also that means when this candlestick closes, that means you will be looking for the market to go down. When this bullish candlestick closes, you'll be looking for the market to shoot to the upside. That's all that you need to understand on this structures here. We have the candlesticks and the basic structures. So let's move on. From here, you can see that we have the structure here that is moving like this. When price reaches this area, you have to find this candlestick. Price action should always take out the previous highs or low. Mostly the previous highs or lows will have a huge rejection. That's all you need to understand around this area. And also this previous highs and lows, they can also be one candlestick. Like for example, from here, we can see that we will be looking for this candlestick pattern here. After the market has broken down this low here, we will find this candlestick here. This one here, you will look for it around this area. Let me do something like this. You'll find this around here, this one around here, and also this one around this area, and also this one around this area. And also another thing that I want to point out is that you see this candlestick, it has to be strong. You will see candlesticks like this. There won't be any bullish candlestick in between this before we can see this. You have to understand that. But sometimes it can be a bullish candlestick like this here, and then we have this candlestick here, and then followed by this one. That means this one is an entry. That is why I'm saying that be sure before making any entries, price should always be strong to the upside or to the downside before price can make a rejection candle. This is what I mean. What I mean is that most people will look at price breaking this high here with this huge candlestick, and then they will start to buy around this area. Then this candlestick comes along. Then the market will start to drop very aggressively. This breakout, we use this breakout as our references. Most of the time you see that most people will say, let's say maybe we have something like this. They see a breakout around here. Then the market start to reverse. And sometimes it can reverse and then shoot to the upside. Sometimes, yes, it can reverse and then still shoot down. But you see this move here is very dangerous. So you have to understand that. So that is why we are looking to go long around these areas. We are looking to go short around these areas here. That's what I can say from here. Let's move on. From here, we can see that we have higher highs, higher lows around these areas. Before price can make a new higher high in a bullish trend, the market is most likely to make a manipulation to show a sign of rejection. What I mean is that before price can make a new higher high around this area, before we can have a new lower low around this area, price will make a rejection to show that this move has ended, this bullish move has ended. We need to retrace back to the downside. So when price retrace back to the downside, you'll be looking to go long around these areas here to shoot to the upside. When price breaks this low here, you'll be looking to go long around this area, and then the market shoot to the upside, and then you'll be looking to go short here and then wait. And another thing is that it can move high here and then shoot lower. So when price breaks this last low here, you'll be looking to go long around this area and then wait for the market to make a new higher high. So that means if you entered here, you have to target this high here because you are in a bullish trend. So it's the same thing as always. So let's move on to let's move on to a more practical example so that I can demonstrate everything easily. We have this example 1 here. So be sure to wait till the end because we have 8 examples. So we have this low, we have this high, we have this high, we have this low and highs here, and then we have another low. Let's look at price action. We can see that we have this bearish candlestick and then a bearish candlestick that breaks this low. Most people will likely to put their sell limit order around here, but the market will just trigger those limits and then shoot to the upside. And then the market will shoot aggressively. As you can see here, we have only bullish candlesticks only. Then here, we can see that we have a bullish candlestick and then a bearish candlestick. This bearish candlestick traded above here. We can see that we have a little bit of a spike around this area with this bearish candlestick. That means you will enter here, put your stop loss above, and then wait for the market to shoot to the downside. But here we can see that the market traded below this low here, but then the market closed bullish without trading. This candlestick did not trade like this. So that means we should avoid that because you are still a beginner in this theory here. So let's move on. We can see that we have this low, then price tapped this low here and then closed with a bullish candlestick. That is why you see the market is still bullish to the upside, bullish here. And then we have one high, the second high. Then the market made a bullish candlestick and then another bullish candlestick. And we can see that this bearish candlestick slightly traded above this bullish candlestick here. So that is why you see the market trending to the downside. And then we can also see that we have this low here. We have bearish candlestick, bearish candlestick, bearish candlestick, bearish candlestick. This market was strong. You have to understand, the market was very strong to the downside. We have another bearish candlestick and then we have a low here. And then we have a low around this area here, a low, and then a low of a bearish candlestick here. Then look at how the market closed. The market tried to shoot lower, but then it rejected. So that means the market, this trend here has ended. So after the market has ended here, that means you'll be looking to go along with this candlestick. Then you just enter on the close, or sometimes you can enter at the retracement here of this bearish candlestick open. I mean, after this bearish candlestick close. So that means you'll be looking to go along around these areas and then wait for the market to shoot to the upside. You can also see that we have a strong here, strong bearish candlestick. You can call it a bearish engulfing candlestick here. The market shoot to the downside very strongly. Someone will try to sell looking at this candlestick alone, but then the market rejected, made a bullish candlestick that traded below this low here. So that means a lot of people will try to put a sell limit order around here, then the market will just tap them and then close bullish. That's when you see this strong move to the upside because the market wants to run away from those orders here. That's why you see those kind of movement in the market. So let's move on to another example. We have this chart over here. Here we can see that the market traded below this low here and then closed bullish, but then it shoot to the upside. This one will just try to avoid it for now. I'll make a separate video explaining this kind of things here. Then we can see that we have a high, price was shooting to the upside very strongly. You can see bullish candlesticks. Then this last candlestick here traded above the previous candlestick's high and closed bearish. That's why you see a bearish trend. Even here we can see that the market tried to break this low, but then it did not. If you tried to buy around this area, that means you will likely be trapped. Let me explain. We have this low here. This low, price closed bullish. Then let's say you enter the market when this candlestick closes, this bullish candlestick close. Okay, the market will try to play around with you there, and then suddenly we have this move here. Your stop loss is still here, stop loss around this area. So this candlestick here will stop you out. But then if we look closely, the market also made that candlestick. You can see that we have a bullish candlestick, and then this bearish candlestick traded above this high here of this bullish candlestick. Then the market shoot low. So any retracement here is just to the downside. But if this candlestick is too big for you to enter the market, you can still wait for the market to give you the same entry like this one here. You can see if this one here, this candlestick is too big for you to enter around here, big, then you look for something like this again. And we can also see it around this area. You will wait for the market to trade above this high here and then close bearish here. It closed bearish. Then that's why you see the market shoot to the downside. And let's wait and see. We have another one here. This one could have easily not worked because we have the move to the downside and then a bullish candlestick that did not trade below the previous bearish candlestick. So we wait. We don't see any bullish candlestick that trades below, and then suddenly we have this strong move to the downside. We have this bearish engulfing candlestick to the downside, and then we can see this bullish candlestick closed after trading below this low. Then the market started to shoot to the upside, and then we can see another one here, the market shoot to the upside. We can see another one here, the market shoot to the upside. You can see another one here, the market shoot to the upside. And sometimes the manipulation can happen fast and twice, and in most cases, if you enter both buy and sell, if this happens, you will win only one trade. Probability of closing both trades with zero loss is very rare. You will lose one and close one with a profit that will cover the previous trade's losses. So let me show you an example here. Let me show you an example around this here, this candlestick here, and this one. Let me show you something. Let me erase everything here. We have this move. We can see that we have this candlestick here. Then let's say you enter the market on the close here. You put your stop loss here, and then suddenly we have this. Then you enter another one. That means right now you are still in a sell. Then a buy setup appear around here. Then you enter again here and then put your stop loss here on the close. So that means right now you have a buy trade here. The other one is to the downside and another one is to the upside. But then the market will move, play with you. And then suddenly this trade here will move to the upside. This one will be in a loss. This one will be in a win. But then that means here, maybe you have gained, let's say this was just a small trade. Maybe the other one will be 1:25 or something like that. The other one will be on a loss. So you'll be gaining this much here, around this profit here. Let's move on to another example because this was example 2. Let's move on to example 3 here. You can see this chart here. This one is pretty much simple. You can see that we have some wicks here. Price traded below this wick here, this low here, and close bullish. That is why you see an aggressive move to the downside. And we can also see that before we can spot this candlestick here, there was a bullish candlestick, but then we have 1-2 very strong bearish candlestick. Then the market just shoot to the downside, making a breakout, then closed bullish. And then we can see that this move was just very strong to the upside. Then we can see that we have also 1, 2, 3, 4 candlestick to the upside. Then look here, we have another trade here. So that means you can enter here and trade to the downside. Maybe target this low here and then stop loss above. Then we can also see another trade here. 1, 2, price traded below the bearish candlestick's low and then close bullish, stop loss around this area, and then you wait for the market to shoot to the upside. This one here could have stopped you out with this move here. This one, it moved to the upside. You can see it's the same thing. And here, let's say maybe you have saw this sell here. This one is a buy. You can easily buy and sell by protecting your profits. This one could have easily brought back these losses from here after prices hit the stop loss. This one could have won. Then you have to always manage those trades properly so that you can understand how to trap the market, because the entries here, they are both entries around the same price levels. So that means it will be 1:2 so that you can bring back the losses around this area from the sell position. This buy should always bring back the sell so that you have zero loss around this area. So then we have this low here. Price came aggressive. You can see only bearish candlesticks. Then price traded below this and then closed bullish. You just enter here, move to the upside. After this trade, if you saw this one here, so that means right now you are in profit. So let's clean everything out and then continue. We have another sell around this area. There's nothing here. Let's see what's happening on the next candlestick. We have this candlestick. It traded below. Would you enter and then put your stop loss here? Would you enter? Yes, price traded below this low, below this low, below this low, below this low. Let me show you. Price moved to the upside. See, you have to always think outside the box. We also have another trade here. We have another trade around this area. We have another sell here. We have another buy. This one could have easily hit your stop loss. We have another sell here to the downside. You see, there's so many trades. We have another sell here. There's so many trades by using this entry model. But you have to understand which low did price break. As you can see, we have those lows marked up. And we can also see that price shoot to the upside after trading below this major lows here. So let's move on to another example. We have a buy low and sell high probability. So let's see what the market provided us with. We have this high, we have this high, have this low, have this low, have this high. Okay, right now we can see that the market broken down this lows here, and then here we can see a trade setup. This one has failed, this one made profit, this one made profit. Around this area we can clearly see it right now, because right now I think you can see them clearly. We have this one, it made profit to the upside. We have this one here, slightly, it made profit. Have this one, made profit. Have this one, stop loss hit with this SL hit. And then we have this sell around this area. Then price shoot to the downside. And then we have this one. Would you buy or would you wait? Why not? Because I have already been teaching you since the beginning of the video. Let's clear everything out. You will see them clearly. Okay, the market hit your stop loss. The market just hit your stop loss around this area. But let's say if you were holding this one, or else if someone else was just trading this one here, could have easily caught this move, but because we are following our rules here, so this one, that means it hit our stop loss here. But because we know how to use this thing here, and then we have another loss here for a buy, that means right now we have two losses, and then we have this one here. We have two losses, but look at this. This is your stop losses. Here it was a little bit bigger around this here. Let me clear everything because this is not tidy. We have this as your area of stop loss for this first trade. We have this as an area of stop loss, which is trade number 2, and then you have this as trade number 3, stop loss around this area. And then look at how the market did. You have two small losses here, and then you win this big one. The market did not give you a chance to get out. You can see, where would you get out if you see this kind of moves? Even if you try to enter this one, you'll be stop loss hit. Even if you enter this one, you'll be stop loss hit. Let's say you enter another one here. That means that now you have 3 losses and the 4th loss. But this trade alone here, this trade here, would have brought back these losses here and a huge profit. And you can also see after losing this one, you can still enter this one and take this move to the upside. And also you can see we have another one. Take this move to the upside. That's all I can say from here. You can clearly see. It's very easy to understand. So let's move on to example 5. This one will be packed with a lot of information, so bear with me because this one will take a long period of time to understand, because I'm going to do step by step. So let's see. We have this bearish candlestick here, so that means there's no trade around this area, so we'll move on. Okay, right now we can see that the market is bullish, but we have this move here, this candlestick here. Would you buy and put your stop loss here, or would you wait for a retracement to move to the upside? Let's see. The market retraces back here and then shoot to the upside. But from here, you can see that we have another trade here. That means if you have this one open, you can put your stop loss around this area and try to enter this one. But that's all on you. Don't say that you had that from me. You can see the market shoot to the downside. That means you entered here. This is your profit. This is your profit here. And then you have this one here. You can see, would you close this one here and have this profit here? Right now, we have this profit and we have another one that we want to decide. Let's say maybe this was 100 pips and then this one maybe, let's say maybe around 40 pips. That means right now you are still on 140 pips. Would you close and try to enter another one around here? Let's see. The market closed here So that means this trade we are still in a loss because you have entered the market here. But then would you enter this one here and then wait for the market to hit your stop loss? Let's wait for someone. Someone will enter, someone might not. Let's say if you have entered a sell around here and then you see that price broke this low and then price broke this low. So that means you still have one win, the second win, and then this one stop loss hit, and then this one is still running, and then you have another one you want to decide right now. Let's enter it running two. We have two wins right now and one with a small stop loss. So let's see what happened. The market was shooting to the upside, but this trade here did not hit our stop loss yet. This one is still running. So we have another one here. Would you enter another one from the same price point as you entered the previous trade? Let's wait and see. So that means this one here is still in profit. This second one, these two trades here, this one is still running in a loss. So that means you have two losing trades right now. But remember, we still have some two wins here and the third one here. So let's wait and see. So that means price right now came back here and then made this trade setup. Would you close this one at a break even? So that means right now we have two wins, two losses, two small losses, and then a break even trade around here. So let's enter this one and see if the market will behave right now. Another one here. Would you take the sell or would you wait for the market to just push to the upside? First of all, let me teach you something. We can see that the market is still strong to the upside. Why should you take a sell around this area? You had the opportunity to go long. You tried here, you tried here. Just wait for the market. Like it's like something like this. You have an impulse and then we have a correction around here. You wait for the market to correct and look to enter here. Because we're still in a bullish trend, wait for the market to correct, look to go long around these areas here so that the market can shoot to the upside. So that's all. Let's look at how the market behaved. You can see this was just a correction here. If you entered here, this move could have easily stopped you out. So let's wait and see how the market behaved. From now on, we have this major wicks here. These are very strong levels. Let's see how the market behaves. This one here looks suspicious, but we are still in a trend. But we can still see, I don't know, let's wait and see. Right now, the market traded above this high. Would you sell? Let's try to sell. Put a stop loss here, entry here. Let's see how the market behaved. The market just stopped us out. Stop loss. But we are still having these trades here that are covering this losses inside this correction here. We can see that the chart is still missed. So, and then we are still in profit with this one here. Price is still moving to the upside. And then we try to sell around here. Let's try to sell. We sell here, sell, and then stop loss here. We are still running this trade, remember. And we also have two big wins here. And this one is still running. And then we just take our stop loss here to around this area here. Put it on break even. So let's see how the market behaves. The market stopped us out, but our break-even trade is still running. So right now, we'll remove this break-even, this stop loss to here right now. And then we will enter again because we're still in profit. We put our stop loss here and then enter the trade around this area. So that means we have this big wins around this area and this one here, and we still have three big wins. These small losses are very minor to be covered. They are covered by this trade only and even this one. So right now, let's see how the market behaved. You can see that we have a line here to show that the market also traded above the previous candlestick's high. You can see this bullish candlestick and can also see that we have 1, 2, 3 bullish candlesticks only. And then the market just decided to spike above and then close bearish. And then let's see how the market behaved. Whoa, you can see that we have this huge candlestick that breaks this previous low here. So you have to be patient about this trading strategy. So let's move on with this chart. Right now, we can see that we don't have anything yet. Let's move on, because I think right now, after looking at this move here, the market has taken two lows here. So that means you'll be ready to look at something else. You can also see another trade here. If you're looking to go short, you can still go short, but then the market decided to stop you out. You can go long with this one. Let's see how it behaved. It behaved pretty well. Maybe you can have put this trade to break even. And then we have this move. This one is a bullish, but the market could have easily stopped you out here. and then we have this bearish move to the downside, and then we have this one here. You can also say, maybe let's say you were looking for the market to close this fair value gap here, and then the market provided you with this trade. So let's see how the market behaved after this candlestick here. The market stopped you out, but we still have this low here. You can see we have a loss here, but remember, you still have this big win. This is for someone who's trying to understand the market. I'm not giving you a full trading strategy because I'm just showing you how to enter the market properly. So just bear with me. This is not a trading strategy. You will have some losses even with all the trading strategies. So at least I'm showing you the losses that you're going to experience when using this thing. So you have this move here. Would you enter to the upside? Let's just see how the market behaved. You can see that the market behaved pretty nicely to the upside. After this move, we can see the price shoot to the upside. And also we can see some sell positions here to the downside. You can also see some buys here, another buy here to the upside, another sell to the downside, but you can have easily been stopped out by this spike here. You have another buy here, there's nothing here. So let's move on to another example. Example 6. We have this one. I don't like them. It's a no because these candlesticks are very big. Like this one, I don't like to take them. Even though they break these highs, even to break these lows here, I don't like taking them. You can see even here we don't have anything, but this one I could have easily taken it because it had broke this two lows here, but this one will be on another video. And you can also see that we have this move, price just tanked to the upside, and we have another one, price just tanked to the upside. We have another sell here. You can still buy, sell. You can see you buy here, collect profit, move to the upside, and then you see another sell, you sell to the downside. You see another buy, you buy to the upside. You see another sell, you sell. See another buy, you buy. You see, it's pretty much easy to understand here. You see another sell, you sell. There's nothing here. There's nothing here. Yeah, there's literally nothing. Let's move on to another example. And another thing here. You see a sell, you sell. See, there's a lot of opportunities here. You will see them when you open your chart after watching this video. You will start to realize that you see this thing every day, but you don't even use it. I'm not sure how you enter the market, but this one will help you a lot. Don't forget to subscribe to the channel if you're enjoying this video so far, and like the video and share it with your friends and family. Let's move on to another example. We have this one is gold on the 15 minutes. You'll just see it plain sight. See, we have this move here. Price shoot to the upside. There's literally nothing here. We have another sell here, price shoot to the downside. You have another sell, price shoot to the, we have another buy. You see, there's no bullish candlestick here until we see this one, price shoot to the upside. See, price shoot to the upside. You can see it's pretty much simple. But for now, please go find some moves around here, and around here, and then send a screenshot to me on Telegram so that I can analyze if you are learning from here. You'll find this PDF inside the Telegram group. You can also use your editing tool to edit any point here so that you can tell me how the market behaved if you understand this video so far. And then let's move on to the last example. On this last example, I won't give you any information because you just have to do it on your own. You will start from here, start here, and then you will end around here. This area here, this white spaces here, is your nodes. So your nodes, I won't tell you which chart is this, but just go and find some example. Just show me that you understand. You can see this one is just a tip for you. This one is a long position because we still have a correction. The market was shooting to the upside, corrected, shoot to the upside. Your entry here, stop loss here. I won't even, guys, I just see them everywhere. So let me show you another one. We have this one, price traded below this low, candlestick. We have this one, price traded above. I'm done. See you on the next video, guys. Just find everything here. Let me clear everything before you steal my things. Please go and backtest after watching this video so far. If you're enjoying this video, please consider subscribing to the channel and come back tomorrow for another video. See you on the next one. I love you all. Always use a stop loss. If you don't, the market will bully you every day. I love you guys. Bye.